On this podcast, a sentimental episode, I'm going to be replaying the very first podcast that I did from way back when in 2016. So it's been 9 years since that time period has passed. One takeaway, I don't think I have as good jokes as I once did back then. But yeah, certainly back then I was still thinking about buying little rental properties. I was starting to invest in larger multifamily deals and syndications and private placements. But also from a personal standpoint, wasn't married at the time. I think I was single. Certainly didn't have kids, right? That's changed the game quite drastically. But what was interesting as I tried to put myself in my own shoes 9 years ago, at the time, the goals were very simple. I was still working my engineering job and just wanted to be out. And since then, the goals have changed. And they're not so much monetary goals, but to create a community and help other people like yourself either buy your first rental properties. So if you're a non-accredited investor, check out my free remote rental e-course on our website. You can go to thewealthelevator.com/turnkey, put your email in there and you get access to our free members portal there where the e-course is. But most of you guys are accredited investors like myself as we've grown up with each other over the last 9 years. We've certainly seen the ups and downs. 2021 to 2023, 24 was probably a down period in my life. I put so much emphasis on money, and especially because we are the general partner sponsor, it's serious. This stuff hits close to home. I still plan to be in the game for decades to come. So I think I take everything in stride. And a lot of this has helped us do better due diligence. And really, it's cleared the ecosystem of smaller operators, people under $1 billion of assets under ownership. But from a personal finance point of couple takeaways. First, I compare the things that the financial goals that I had back in 2016 to now, and it's very different and things change all the time. And then secondly, I don't know why I thought of this, but one of our previous virtual assistants, overseas workers from the Philippines, very low cost area, I used to pay them like a couple grand per month, which is, I think, is a very good salary for them. Enough could afford a house cleaner and a chef while they do clerical work for me as a virtual assistant. And maybe they weren't financially free because they needed a paycheck, but they lived a very high quality of life. I just bring that up because the contrast of you can have a lot of money, but you can be in a totally different headspace in terms of your enjoyment of life. And you get past a certain point, I would say past $1 million, $2 million net worth, a lot of the correlation between how much money you have and happiness goes away. Now, obviously, these days I'm a lot more mission driven. I want to see what kind of impact our group can make in the future. Definitely some things to prove after riding the commercial real estate wave these last several years. So I want to take a little time to share a short story. This is entitled The Fisherman Story, which I believe is a very good way of kind of understanding on where you're going and putting things in perspective. So here it goes. It's been very impactful for me to think about this fable. There was this businessman who takes a break in a small Greek coastal village. One sleepless night, he finds himself at a pier where he sees a fisherman docking his boat with a hefty catch of tuna. Curious, the businessman asks how long it took to catch them. Only a while, the fisherman replies. The businessman, puzzled, wonders why not stay out there longer and catch more. The fisherman's simple life, bit, spending time with family, enjoying the village life, seems alien to him. The businessman offers his MBA insights, suggesting more fishing, buying bigger boats, and eventually building an empire. But the punchline, after all that empire building, the ultimate goal seems to be returning to a simple life, much like the fisherman's current one. It's a wake-up call to reassess. So I've got two suggestions for you to ponder. First, decide how you want to live and then figure out what it'll take in terms of time and money to support that lifestyle. You might find it requires less money than you thought. Second, focus on the journey than the destination. This approach has made my life a lot richer, especially in difficult times. And as we discussed in our podcast previously, And you'll see this contrast when I replay the episode one here in a little bit, that it's all about enjoying what you do and finding joy every day in either growth or just the process of it. So the fisherman's contentment with his life is something that many of us aim for, but sometimes overlook in our pursuit of more. It's a reminder to define our own end game and not just chase after more without knowing when to stop. Reflecting on another story, it's like putting your oxygen mask on first before helping others, as they say in the in flight emergency protocol. Once we're secure, we can start designing the life that we truly want, not just the ones we're hustling for. And I would argue then it's about helping other people, which is the whole idea of the wealth elevator, building this community, and myself and the other people who are part of it. Hopefully, you'll join us one day and help other people send the wealth elevator back down for others, help other people's ascend. I think at the end of the day, maybe you don't want to help other people. That's cool. At the very least, it's about designing a life that balances achievement with enjoyment, whether it's about building a legacy or just living well. You define your own end game and remember this journey to financial freedom isn't a race, but a marathon. It's not about the endless accumulating, but more knowing when you've achieved your version of success. Defining your end game is essential, or you'll never feel like you've truly won. So hopefully this sparks some thoughts or even better actions. Looking forward to hearing your take on this. Thanks for listening over these last 9 years. And I'm going to replay that first episode. This site is just my method for making real estate passive income. This is my path and does not mean it's for you or your situation. This website is not the Bible of real estate, not even the model for buy and hold investing. But at the very least, use this site as another data point and get some of my lessons learned. The real estate universe is pretty big, as you guys know. You got flippers, wholesalers, rehabbers, bird dogs, tire kickers. You see them at the RIA meetings a lot. Buy and hold folks, all sorts of strategies that take up various places on the passive to active spectrum. I personally have got a pretty busy W-2 job being an engineer. I stare at my Microsoft Outlook inbox most of the day. I don't flip, wholesale, or do any other active real estate activities. I don't know what the deal is with the flippers and the wholesalers calling themselves investors. In my opinion, they just have jobs in the real estate industry. I think they should be called traders or something, like how we call stock traders, day traders. But anyway, as I mentioned earlier, that's why I made this website and podcast for the passive folks out there, because much of what you read on Bigger Pockets and the internet and other podcasts are a lot of very active real estate strategies. On one hand, I'm pretty jealous of the active real estate guys, since some of them are pretty awesome and very experienced at their craft. However, I don't have the patience or time to do what they do. Yeah, my name is Lane, and I'm a lazy, passive investor because it fits my personality, my current lifestyle, and in the future, I'm not looking to replace my current job with another one licking stamps or making letters or swindling buyers who don't know any better. Okay, I know that's being a little harsh, but just saying. My beef another level with the wholesaler and bird dogging model is how reliant it is on the 3Ds: divorce, despair, or death. I personally take exception to the ethical validity of this type of business. I see it as taking advantage of those in a bad situation, and I also see it as scorching the earth mentality for profit. The active real estate investor camp will say that you're solving their problem and providing a means out of their situation. I call that justification BS. Call it like it is and take the righteousness junk out of it, is what I say. On the other hand, buy and hold rentals are about improving properties and providing fair housing. The key is being a responsible investor and always remembering that you need to provide good living conditions for your tenant. If you can improve neighborhoods in the process, then great. So who's this site for? As I mentioned, I'm fortunate to have a full-time job and I don't have the time to find these amazing deals you hear about. I think you guys hear it all the time. 100% ROI, no money down, this weekend for a limited time. I want to introduce you guys a concept called the time-money experience triangle. You got to just recognize what skills you have, your resources, and what you lack. If you have another job, there's just no way you're going to do this all by yourself. You need to leverage your time and money that you do have. Don't be that so-called investor who works in your business, not on it. In other words, don't be that guy who spends his weekend painting and fixing toilets when he should be finding deals and working with banks for lending. If you're that guy, when are you going to be an investor and stop being a landlord? When I was a college student going to the University of Washington, the best school in the land, I remember when me and my friends would rent a house together and the toilet broke and the landlord came over. Here this guy comes. He didn't send any handyman. It's just him and his wife. They come over driving their Mercedes. The poor wife has to sit in the passenger seat as this guy fiddles around with the toilet. He's not a plumber, but he's just trying to figure it out on his own. And I thought to myself, man, that's not the way to run this business, I think. But he had a Mercedes after all, so what did I know? Yes, I'm that lazy 4-hour work week, outsource what you can type of person. At the same time, I'm also that guy who believes in achieving my best and highest use and spends time on what is most important outside of real estate. This site is for 3 types of people. First, folks who have pretty well paid jobs. Let's face it, the reason you came here instead of Googling work ideas on your free time is saying something. You're probably not the guy Googling, how can I increase my leadership qualities to manage diverse employees with different backgrounds? How to talk to my employee to give me a raise? The second group of people who should be reading and subscribing, by the way, to these free articles and podcasts are the straight up rich people who are tired of getting those paltry returns in the bond and mutual funds. And number 3, if you're just a government conspirator who believes the mutual fund and stock market is a big Ponzi scheme, yeah, you can join too. Just be on your best behavior. Whatever category you guys fall under, you can join the party. We all share a vision of being financially free. Tony Robbins defines financial freedom as having the freedom to do what you want, where you want. What is fundamental to achieving the goal is that passive cash flow is the end game. You should start any journey with the end in mind. I would like to introduce a term called FYM, which stands for FU money. Have you ever seen that commercial with the creepy orange number following the man or woman around, supposedly representing the amount of money that the person needs to acquire to retire? It's like that number, but under the simple passive cash flow definition, FYM, the number is more of a cash flow number that sustains your lifestyle, and the FU part comes when the day pissed off at work and be like, F you to everybody. I don't need to be here. You know, at work, there is that one last samurai-ish 65-year-old coworker who has 50 years of service. I don't know how he's got 50 years of service, but I think he started working when he was 15 years old, is what they say. Anyway, he's got a grumpy attitude, and he always says that he can retire at any time, and does not really help anyone. It's just a pain in the butt. That guy obviously wasted his life away with the traditional wealth-building methods, but he is at a point in his life where he does not care, and you can be like that guy, except with all the wrinkles and the fact that people might actually like you. Imagine coming into work because you want to, because you choose to, and actually want to hang out with your coworkers. For some, you might just merely tolerate the day job for the stated W-2 income to qualify for bank loans, and the fact that you get free coffee, and you get to use the toilet for free. Trust me, I did the math. I'm an industrial engineer, and I took into account the water and life cycle cost analysis of the crapper, and the time you take to clean the thing. In all seriousness, you might like your job, and that's great for you. The important thing is to do what you want on your terms because of your financial freedom. Now that you had that to sink in, another concept called the crossover point is the point at which your investments begin to earn more money than your cost of your living expenses. At this stage, one has the freedom to leave their full-time job for other meaningful ventures. Now that you had 2 seconds to digest that concept, I would like to introduce to you the 2.0 version, which includes 2 new factors. Number 1, decreasing motivation, a negative exponential equation contingent to an increasing investment return. And number 2, constantly increasing expectations, or also known as the boss be getting on my nerves. It's a linear climb. The graph of the crossover point 2.0 and describes your work-life struggle. I know it's hard to see this in the podcast format, but please bear with me and go check out the website for yourself. Look, I'm not saying I don't like my job, but I can't see myself being there forever, such as 20 to 30 more years. Another thing, age discrimination does exist, and even though you are now a high-performing yuppie, some folks won't want to hire you after the age of 50, especially in the tech community. I do know a lot of people who hate their job, not to mention their commute. Life is too short. I was once in a job where the company was very conservative, and that boss came around and ran people over continuously. It sucked, and I think you guys know what bus I'm talking about. But little did my boss and my boss's boss know that I quietly made more money, salary plus income, than both of them at the age of 28. The epiphany occurred to me one day, why the heck would I want to work 50% harder deal with 100% more BS working for these jerks, and get paid just 8% more. 11% if I negotiated my strengths or sucked up to my boss. As a result, I transitioned jobs, took a small pay cut, and started drinking simple passive cash flow lattes every morning. I'm not advocating getting a bunch of rentals, quitting your job, and then spend every minute drinking margaritas, pina coladas on the beach. Now, when you have the freedom after spending a few unfulfilling days with margaritas and pina coladas, and possibly solving all the Scooby Doo cases you want, I hope you devote your time to doing good for the greater good. When I don't have work, I plan to teach young people about real estate and personal finance. I'm thinking of going around to high schools, but no one in their right mind would hire a girl man to teach young people, especially for free. Take a moment. It's creepy. Like Jared from the Subway, creepy. For those of you who don't know who Jared, the Subway guy, was, he was like 3,000-pound guy who ate a lot of Subway and lost like 2,000 pounds. However, he still looked like he weighed 1,000 pounds. But everybody liked him as a celebrity, and he used his celebrity status to lure boys and girls. And yeah, I'll leave it at that. Kind of like the Pied Piper, luring all those little boys into the cave. Obviously, that's not my intentions here. But to get around this barrier, I think I need to write a book. But not only any book, but a New York Times bestseller. But I guess I'll settle for that crappy e-Kindle version. So schools will be like, hey, this guy has a book. And then bang, going viral. To write a book is a daunting task, as I've heard. So I figure with each blog post, I'm slowly getting better at writing and chipping away at my target page count. The more subscribers, it's free, people, please subscribe to this blog, helps me prove my point to publishers that people actually read this stuff. So this is the point where I wrap things up and bring this full circle so you can get off your computer, raise your hands in the air, and mimic Mel Gibson in the 1995 movie Braveheart by screaming, "Let's get rich!" That's why I'm going to try and leave you probably lazy people with an action plan in each article. So you just don't go about your day as normal, but take gradual steps every day. As Arnold Schwarzenegger says, just do it. He does not really say that. He says something more, don't be an economic girly man. So please take action. It drives me crazy how everyone reads so much and does diddly squat. I host a local meetup for real estate investing, and someone will always be like, hey, that's a fascinating spreadsheet you're sharing. Would you please give it to me? And I say, sure, why don't you send me an email to remind me and I'll send it right over. No one ever freaking emails me for that spreadsheet. So anyway, that's enough for now. Hope you like the content here. The future podcasts and articles will be a bit shorter and less introductory-ish. All right, that was the first episode that I've ever done since 2016. I think I'm fatter than I was back then, but I think a lot more rich in experiences today and a little bit more perspective. I haven't figured everything out yet. Here's to another 9, 10 years of doing this. Hopefully you guys can join along on the Wealth Elevator along with myself and the community. Here's some details on how you can interact with myself in person and our group in this little commercial. What's up, investors? I'm going to be doing some meetings, and I wanted to also arrange some in-person meetups with you. So a couple opportunities, the Anderson Tax and Asset Protection Summit, which is going to be held in Dallas, Texas, March 27th. It's about $99 to attend, but if you complete my form, I've got some free tickets to give away. We're going to be doing it raffle style. Click on the link below to get entered into that and then get signed up for that conference right there. Additionally, I'm actually going to be checking out some deals out on the East Coast to meet up in Jacksonville, Florida. Now, I think for a lot of new investors out there, it's always great to get that in-person, face-to-face. We don't know how many people we're going to have. I always like to have it maybe a little bit more intimate, maybe just a private dinner. We get to know each other a little bit better. But if you're around the end of March in Jacksonville, Florida, please also click on the link or reply back, let me know, and put you on that short list. Additionally, as I always do, going from Hawaii over to that side of the world, I'm going to probably go through Los Angeles, San Francisco, or Seattle. So if you're one of those three locations, as we've done in the past, reply back and vote which way I'm going to be rounding my travel through. And we'll also try and do a hangout in those locations. Going back to the Anderson Tax and Asset Protection Summit, a little more context there. We've had a lot of our members go to this in the past. I think it does a good overview on legally how to reduce your tax burden You can ask questions live. It's also cool to meet other people, even from outside our ecosystem, who are going to be there. And of course, I'll be there and sign up, and maybe you'll win those free tickets. So you guys know me. I always like to be efficient. I've got some other due diligence meetings, checking out some real estate deals and some PE deals. Click on the link below and let us know where you're around, or hopefully you'll be in Dallas that last week of March. But looking forward to meeting all of you guys maybe the first time, or seeing some old friends, and we'll see you out there.